So they're always something to worry about, and the key organ in your body in the stock market is your stomach. It's not the brain. If you can add 8 and 8 and get reasonably close to 16, that's the only level of math you need to know.
Hello everyone and welcome back to another episode. The man that you just heard speaking was one of the greatest investors that have ever lived. You just heard Peter Lynch. And what he said that the most important thing with investing was not the brain, but the stomach. And so in today's video, I wanted to go over a few different things, specifically focusing on how to invest your first $1,000 in the stock market. If you're brand new to the stock market, if you don't know what to look for, I will help you look at everything. I will help you define a strategy, learn the basics about what you need to know, show you how I'm investing my money, and show you how you can implement this into your investing strategy. So I have these couple little steps here that you need to go by in order. There are 7 quick steps and then some tips at the end that we can go over, and this will show you exactly how to get started. So my name is Jordan. I'm a millennial investor. I'm a dividend investor. If you want to follow along with me in my journey, in my investing journey, I would invite you to subscribe. We now have 50 people sign up using this referral link. So after the video is over, if you decide you want to invest $1,000 for yourself and you want to get started, you can use this brokerage for absolutely free. Get $10 for signing up, and also my portfolio is shared down below if you want to see the 26 holdings that I have, and they're all listed right here. So let's go ahead and get started. And the first step to invest your first $1,000 is to research investments. Now notice the first step here does not say research the stock market. It says research investments because there's all different types of investments out there. Whether it be buying stocks in the stock market, whether it's buying real estate, there's tons of different passive investments out there and active investments that you need to look into. So look into all those different types and see that if stock market investing is the one that makes most sense for you, which goes hand in hand with number 2. Remember how we said that the brain is not the most important thing with investing, it's the stomach? Well, determine if this is right for you. The main thing I wanted to focus on, which goes hand in hand with number 3, let's talk about the emotions with your investing. If you can emotionally handle investing, if you can see your investments drop significantly in value and then raise significantly in value, see this number, the amount of money that you have invested, change rapidly, then the stock market can be for you. But if you can't handle that, then you should probably not be invested in stocks. And I want to give you an example here real quick. I want to show you SPY. This is the S&P 500, and those of you that are beginners, because I know that's most of the people watching this video, the S&P 500 is just the overall market. These include all the big brand names that you guys know and love, including all 26 stocks that I own. They're all in this list, like Coca-Cola and Pepsi and McDonald's and Apple and Google and Facebook and Caterpillar and Johnson & Johnson, and all these different huge corporations are all inside of the S&P 500, the top 500 companies in the United States. Now, these top 500 companies shift in value by a lot. Now, you can see here in 2018, you see that they were $290 a share, and then they went down to under 250. They went down to 234. And then we recovered. We went back up and up and up in 2019. And then to begin 2020, we had a steep drop off where these stocks went from 336 a share all the way down to 222. So a massive downturn. Here's the year chart right here. So if you're buying these stocks, you should know that in the long run, they will always go up. If you're investing in the stock market, if you're investing in safe companies, you will almost always make money in the long run. But in the short term, anything can happen. You see how this is very jagged. There are times when it's going up. There's times when it's climbing down. There's times when it's going up again. There's times when it's free falling, going down significantly in value. And the key to this, learning if the stock market is right for you and learning the psychology and the disciplines of investing, is learning if you are able to stay invested through these downturns. Because the worst thing you can do in the stock market is sell when the market goes down. Because as you can see, 2020, another perfect example, the markets came right back a couple months later and you would have got all your money back and then some. Now, the disciplines and psychology behind investing. Now, the one things I wanted to talk about here, in the same way that people get too excited about these uproars in the market, people will price stocks at insane valuations. People will make stocks go to crazy prices. Big moves in the stock market will happen all the time. Let's take a Tesla, for example. Tesla in the middle of 2019 was $30, $40 a share. Today, it's $420. I'll show you some more examples. Shopify is a stock that has had big moves up. Shopify has went from $20 a share about 4 or 5 years ago to now it's over $1,000. That's it just in the last 5 years. Now let's look on the negative side of things. There are other stocks that have been hit very hard here in 2020. In 2020, this stock was a $40+ stock, and just 2 or 3 years ago, this was a $70 stock. We're talking about Carnival Cruise Lines. Today, it sits at $15 a share. Let's look at some others, for example. I was looking at one the other day, Nordstrom. Nordstrom is a huge retailing outlet for clothing. Well, okay, 5 years ago, this was $67 a share. Today, it's 14. And I'll show you one more example. I made a video about this the other day, GameStop. GameStop has went down over 90% in the last 5 years. This was a $50 stock, and then just the other day, it was priced at $2. So when we look at these companies, you have to remember that these stock prices can go anywhere. But when you own the top 500 companies in the world, they will switch out the best and the brightest into the portfolio, and you will always be successful in the long run as long as you stay invested. Number 4, define your strategy. Now, there's a lot of different strategies out there, and I just wanted to quickly mention this. This is off of Simply Safe Dividends, okay? Simply Safe Dividends is a website that is focused on primarily recruiting dividend investors, and they have their own dividend tracking website. I would not recommend it because it is very expensive, but it is a great website. But what you can do for free is read some of the articles that they have here. They are primarily focused, like I said, on dividend investing. If it's right for you, I would go ahead and recommend it. As a dividend investor myself, I think it is perfect for not only tracking your portfolio value, but what I focus on are these two charts right here on the top. That's why I put them on the top. My annual and monthly dividend income, as that increases every single month like clockwork. And this portfolio, well, it pretty much does what it wants and goes crazy. But I would recommend this website, so go ahead and check them out if you're interested. But find your strategy. Maybe you're into growth investing. Maybe you're into dividend investing. Maybe you're investing into individual stocks or ETFs. Whatever your strategy is, the one thing I can tell you, as long as you're investing smartly, as long as you're not doing one of these few things, as long as you're not selling out of panics, as long as you're not trading short-term movements, not day trading, and as long as you're not messing with options, generally speaking, you should be just fine. Now, step 5, individual stocks or ETFs. This is where people get held up a lot. Now, one thing I would recommend, usually if you're a beginner, investing in individual stocks, I would stay with the safe stocks, which is something I like to do anyways. Stay with your safe stocks. Stay with your Coca-Cola. Stay with your Pepsis. Stay with your Johnson & Johnsons. These are safe companies that have been around for hundreds of years. And guess what? I got some news for you. These companies are not going away anytime soon. So investing in these stocks are usually very safe if you want to invest in individual companies, but especially for beginners or for people who do not have a lot of time on their hands, who don't want to be researching their investments. Guess what? You buy SPY, you buy VOO, which is the same thing. You buy one of these two, and you buy them over and over and over and over and over and over again. Without fail, never sell them. You will be a millionaire if you do it like clockwork for decades. Now, next up, we have track the market, growth, or dividends. Now, once again, the same thing. There's tons of different ETFs out there. They offer so many different things. I've showed some ETFs here and before. Like there's high yield dividend ETFs that pay out monthly, like SPHD. There's SCHD I made a video about the other day, which pays out quarterly, another dividend ETF. And there's also growth ETFs. And then if we go to the research tab here, some of the ones that I'm not too familiar with are the growth ETFs. Just to show you, for example, let's go to equities. Let's go to domestic. Let's go to large cap. And then let's go to growth. You can see some of the top growth funds here, like for example, QQQ, primarily focused on tech, and VUG is another one, a Vanguard fund that I really like, that is primarily focused on growth companies, that pays a tiny bit of dividends, but you have to pick, once again, your strategy, or do you just want to track the market? Like I said, if you just invest in SPY, which is the overall market with those very safe companies, as well as those high growers, you'll be just fine, and this is the best strategy for most people, but if you want to invest in either one, you have that option. And then number 7, the last but not least, the most important of all these, consistently invest, stick with your strategy, do not sell. If you had to listen to anything that I had to say in this video, if you're getting started with investing, if you can do these 3 little things, you will be very, very rich in the stock market. And notice how the last one, how I put it in all caps here, right here. See it right here? Go ahead and take a look. Do not sell. If you see your stocks go down in value, if you're investing in ETFs like the S&P 500 and the stock market goes down 10%, 20%, 30%, do not sell your stocks. If you want to take money off the table when stocks are really high, go ahead and do that, whatever, that's fine. But do not sell in a panic. Never sell in a panic. It's the absolute worst thing you could do. If you took away one thing from this video, that's the one thing you should take away. But consistently invest, stick with your strategy, and you'll be just fine for the long run. And then some quick tips I wanted to mention before we wrap up the video. Those are the 7 steps that you need to know, but there's a couple quick tips I wanted to keep in mind. Keep emotions out of your investing. And the same thing that goes hand in hand with the downturn in the market. When the stock market goes up and you see your money going up in value, the same way that my portfolio, you see this little chart right here. I started with $1,500. In the same way that this chart goes up and up and up, I do not get greedy. I do not say, oh my gosh, it's never going to stop. I'm going to just hold on to these stocks forever. I'm not going to be conservative whatsoever because I'm making so much money. Look how much money I'm making. So don't be over anxious. Don't be greedy. But on the same time, when things go down, when the stock market goes down, you do not want to be a scaredy cat, and you do not want to be scared to invest your money when stocks are trading at rock bottom valuations like it was back in March of this year. And then second one is passive, set it and forget it investments are best for most people. Like I said, investing in ETFs, if you can own SPY, if you can own VOO, if you can own VTI, if you can own a lot of these very safe, stable ETFs that just basically track the market, you'll be just fine. And for most people, since they don't have the time to research companies, pay attention to stock prices, usually investing just in those broad ETFs is usually the best way to go. And then third is your brain is not the most important thing in investing. The most important thing in investing is your stomach. I want to remind you that once again, which goes hand in hand with your emotion, with your knowledge, the psychology behind investing. Invest with your stomach, not with your brain, as weird as that sounds. Start with paper trading or a small amount of money. If you're wanting to get started and you've never invested before, one of the ways that you can get started, if you're not wanting to risk your own money, if you want to see if this is for you, go ahead and either do one of the two. Either start with just $100 or $200 just to see if it's right for you, get your feet wet, see if this whole stock market investing thing is meant for you, or if it's not, and you can go ahead and set up a paper trading account if you want to trade with fake money. The stock prices are real, they're real-time price movements, but you're trading with fake virtual currency instead of real cash. So that way if you lose, you don't lose anything, but you gain the knowledge and experience of the stock market. And last but not least, use my referral link to get started. If you deposit $100 to M1 Finance and use my referral link, you will get $10 for signing up. We've given away $500 through the form of successful referrals from M1 Finance. 50 people signed up. So go ahead and get signed up. Be the 51st person to sign up. I would really appreciate it. But thank you guys so much if you made it all the way to the end of the video. Like I said, I track my annual and monthly dividend income as well as my portfolio, my YouTube income. I disclose everything on this channel. Buys, sells, wins, losers, dividends, everything you could possibly imagine. I show everything on this channel. I do not hide one thing. I will show all my activity, like always at the end of the video, and I even show my entire portfolio on every video updated every single week. So thank you guys so much for watching. If you made it all the way to the end, go ahead and check out the stuff in the description. Your auto savings accounts, credit card referrals, mentoring ship calls, all that stuff down below. But thank you guys so much for watching, and I'll see you guys next time.